Tether reports billion-dollar profit, while its reserve buffer reaches a record $8.23 billion, and that is a direct confidence signal for the stablecoin market. The company posted $1.04 billion in Q1 net profit. The important piece is the buffer, because it represents surplus capital above the assets needed to back USDT redemptions one-to-one. Read the opening through Tether reserves and $8.23 billion buffer. The useful tension is whether next attestation turns the first signal into a durable development rather than a short-lived reaction. The confirmed context is that the figures came with an attestation update covering financial data as of March 31, 2026. Tether emphasized heavy backing in U.S. Treasury securities, which remain the dominant reserve component. The reserve buffer is not the same as the entire reserve base. It is the extra cushion above token redemption obligations. The context is anchored by attestation update. With March 31 data already in view, the next claim has to clear the threshold of reserve mix before it deserves more weight. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Tether reports billion because the mechanism is Treasury income and surplus reserves. If an issuer holds liquid government securities, yield on those assets can generate profit, while the reserve base supports redemptions. A larger buffer gives more room to absorb losses or handle large redemption waves before reserves approach the one-to-one threshold. That is why the $8.23 billion cushion matters. The working layer is reserve buffer. Its current signal above 1.1 matters because mechanics decide whether a headline becomes usable infrastructure, tradable depth, or only a narrative. The stress test is stress event because a mechanism only matters if it holds after the first announcement, price move, or operational change. That keeps attention on observable follow-through instead of assumption. The impact reaches USDT users, exchanges, market makers, and regulators. Stablecoins sit inside trading pairs, remittances, DeFi liquidity, and institutional cash movement. When the largest stablecoin issuer reports a wider reserve buffer, it can support confidence in day-to-day liquidity. It also keeps attention on how stablecoin issuers disclose reserves and manage risk under changing regulation. The scope is defined by USDT liquidity. The condition to track is stablecoin rails, because that tells us whether the impact is concentrated, widening, or still waiting for a clearer response. The open question is not whether Tether reported the profit and buffer. Those figures are confirmed. The unresolved part is how future attestations compare, how the reserve mix evolves, and how stablecoin rules will treat large issuers. A record buffer is helpful, but it does not settle every transparency or oversight debate. The evidence gap centers on oversight gap. The limitation, record buffer, keeps the analysis from overstating the outcome before policy update arrives. This is where policy update becomes the discipline check. Until that arrives, record buffer should stay separate from the larger claim around oversight gap. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For Tether reports billion, the next signal is the next reserve update. Watch whether the buffer keeps growing, whether U.S. Treasuries remain the dominant backing, and whether new stablecoin rules change reporting expectations. If the cushion holds through market volatility and redemption pressure, the confidence signal becomes stronger. If it shrinks, the market will want details. The closing read depends on buffer change. Pair that with $1.04 billion profit, and the market or user impact becomes easier to judge without guessing ahead of the evidence. The closing read should stay tied to reserve trend and $1.04 billion profit, because those pieces show whether the watch item has real follow-through or remains unresolved.